All right. Well, welcome. Welcome to BBE TV episode 11, LLC for Arts. I have a special guest with us today, Michelle Dorsey. Thank you for coming. How are you doing today?
I'm good. What about yourself?
I'm doing well. I'm doing well. So give me a little background before we get into the conversation. Give me a little background about who you are, how you got started.
So I'm Michelle Dorsey. I got started back in 2005. Basically, how I started the business is because I heard people talking about. Well, let me just go back a little bit. When I was a kid, my mother used to always take me to the bank, and she used to always say that I always used to be like, "I want to do what they do. I want to do what they do." Didn't know, what they were doing. Kind of find out they were accountants. Who would have thought I would have wanted to be an accountant?
And you said, how old were you when you wanted to be?
She said I was like 5 or 6.
That is a very advanced thought.
Yes.
My mama embarrasses me all the time because I told people I wanted to be a Ninja Turtle, but you said you wanted to be an accountant.
I didn't know what they was doing. They just was messing with money. I must have liked money, So back in 2005, I heard a lot of people talking about, man, they charge so much to do taxes. And then when I went to go get my taxes done, they were charging me so much money. And I was like, yeah, I'm not paying y'all another penny. So, of course, I started learning how to do taxes and learning meaning messing up, right? So I messed up all my family tax returns. They were crazy enough to let me, do their taxes.
Whoa, we can't just skate past it. You said you messed up all your family.
I did. I was learning, literally. So
when you say messed up, like audit mess up or?
Let's just say I wasn't calculating right. I didn't know what I was doing. So I contacted the IRS and I told them what I did. And I got this gentleman and a manager came on the phone. And I told them what I did. And the lady was like, oh my God, we never heard nobody doing this. So I told them my reasoning behind what I wanted to do. And they said, we're going to ship you out a book and we're going to email you something. And I told them the 3 tax returns that I messed up. They showed me what to do and guided me through it. And from that day forward, I went and did everything that they told me to do. I fixed the tax returns. I got in different classes. And within 3-4 months, I was good. I was a pro.
So the IRS helped you out
because I called and told them myself.
Okay.
I didn't want to go to jail.
It was like
young.
that.
No, I didn't know. See, I didn't know. I just know. You learn that you don't mess with the IRS. So, I learned. I started going to different classes and just training and. I just learned a lot of things about taxes. And I started out doing taxes like 3-4 months into the game. I was really good at individual tax returns. And then I started venturing out and doing business tax returns, getting more education. And I had already had other accounting things under my belt because I was working in that field since I was 18 years old. So except for the tax realm. And after a year went by, I had expanded to full-blown businesses, and I had expanded not to just Illinois to Indiana as well. And after 3.5 years, I had expanded to 5 different states, tax returns, and I had added all other services on, like grant services, auditing services, because I was already in the grant field. I was already in the audit field. And then I start adding on throughout the year, certifications, payroll, and all the other services that I'm doing, financial literacy, and start expanding into different states. And then now, as of 2 years from now, I expanded into a different country. And now with a few hundred individual clients up under Prosperous Accounting Services and many businesses up under my company as well. And there are very vast variety of businesses under my company, ranging from different aspects of business entities.
Wow. But the funny thing, and I mean, I always look for these types of messages, but you said that you messed up first.
Yes.
but you want it to be better. So you figured out, you called the IRS, you told on yourself, and then they helped you through it. I think that's always important, because it's not, if anytime you try to do anything in life, you got to fail first normally.
Absolutely. And you have to have a passion for what you're doing. If there's no passion, then you're not going to succeed. Anyone that has a passion in what they're doing and their willingness to succeed, then you're destined for success.
Facts. It's just church on a Sunday right there. So you said that you work with businesses as well as, entrepreneurs. Mm-hmm. Yeah. So, okay. So are any of the entrepreneurs that you work with like creatives?
I have 3 of them.
Okay. And what do they do?
One is a band, and they go state to state with their band. And also they have been practicing with stars as well. Okay. One of them do different crafts. And then the third one is knitting and crocheting.
Okay.
And sell their items to different boutiques.
So, so that's interesting. Like the whole, the basis of today, right, is, I, as a studio engineer, one, I want all of the people that come in here to be successful.
Absolutely.
But also, as I've gotten older, I realized that there are so many things that I wish I would have known when I was younger. Okay. Because I started off rapping and making beats and stuff. And I'm like, damn, if I would have thought about what I was doing, like, took it like a serious business, because it's hard to get there. A lot of people, and I myself was guilty of this. I had this idea that if I was just talented enough, I can come to the studio and I just make this great music and I'll put it out, and then somebody's going to come and save me and make me a millionaire. You know what I'm saying? And I know how crazy that sounds, is how irrational that sounds, but that's a thought process that a lot of people have. So now I've been kind of making it my mission to, like, let's have more educated conversations about how we can navigate this music thing better. Absolutely. And one of them, I think, is you literally should start. I say an LLC. You might tell me why that's not the right route to go. But just start yourself a business. And it could be, from what I understand, it could be your name, like your artist name, or it can be some other name that you want to create, and then you can have a series under it, right?
Series under it, yes.
Okay. Yes. Okay. So yeah, let's get into that conversation, because I think we all deserve to be the best versions of ourselves. Mm-hmm. And if Target can do it, I know that's a big name, big familiar name, but if they can do it, you can too. Essentially what they are doing is they are paying people to, one, they're paying for the product that they're selling. Mm-hmm. They're paying the workers to stock the shelves. They're paying the workers to ring the stuff up. And then they're keeping track of all of the money that they're spending and all the money that they have coming in. At the end of the year, they do taxes. And because they've spent so much, I believe that there are tax breaks for that. But let's just start there.
Yes. So I would say the best bet is a LLC.
Okay.
LLC, you get better perks. Okay. And when I say perks, write-offs. Mm-hmm. So for artists, yes, a LLC is great because the things that you can write off will be beneficial to artists.
Right.
And what I've heard, when people create their business or incorporate their business, they forget the other things that they need when you have a business. So when you incorporate your business, it's not just saying, hey, I already incorporated. No. How are you going to do your bookkeeping? What about payroll? How are you going to maintain your expenses and your revenue, or keep track of that? How are you going to maintain your mileage? Who's tracking all of that while you're out taking care of your business? Mm-hmm. You can't. Some people are good with spreadsheets. Some people aren't good with spreadsheets, which means, hey, you need an accountant, someone that's experienced to be able to get all of your things in a system ready for tax season, so that you won't be pulling out your hair all over the place come the end of the year. You want to make sure you're not missing any expenses, because a lot of times what people forget, they forget all their expenses. Oh, I didn't know I could purchase that. I didn't know I can expense that. Oh yeah, I did get that money, but because you're doing it on a spreadsheet, you're not logging that in. You're forgetting important steps to your business and important write-offs and perks that you're going to have. And then don't forget to ask questions.
Facts. And I feel I'm already knowing that I'm going to probably regret not keeping track of certain stuff. I feel like I do a pretty good job. I have a business account, and I try to like make sure that everything that's under my business account goes through it. So if it's money coming out and I try to make sure I do it with that account.
So that's a very important thing, because a lot of people think that they can commingle. I say to people that's commingling can get you in trouble.
Wait, just so people understand, what do you mean by commingling?
Commingling means that if you have a business and now you're doing your business from your personal account and your business account, that's commingling money. If you have a business account, which you should have a business account if you have a legitimate business, you need to make sure everything pertaining to your business is flowing through your business bank account.
How difficult is it to get a business bank account?
It's not difficult at all. So once you incorporate your business, all you need to do is take the incorporation paperwork and the EIN paperwork, which is the SS4 form, to the bank of your choice. Okay. And then they'll give you a business bank account. However, let me just say this, because I used to work at a bank for some years as well. Some banks go by credit. Okay. So you have to have some type of good withstanding and good credit to be at certain banks, like a Chase, a Bank of America. You have to have some type of a Harris Bank, some kind of good credit to be able to get an account, some kind of good withholding, or you can go to another bank where you can get your status up to par, so that you could be able to go with a Chase or a Bank of America. So
you saying like the Boost Mobile of banks? Who's
like the Huntington?
The Huntington, okay.
So, which I don't think Huntington is a bad bank, but I'm just saying.
But they're out there because everybody doesn't have the best credit situations.
Absolutely.
And if you're having difficulty getting banked, then maybe try Huntington.
And that's another thing. Depending on the size of your business, you need to also make sure that the bank that you're using is accessible wherever you're at.
Facts.
So that's another important thing.
Yeah, you want them to be, where you can pull up when you need to pull up.
And they're not charging you money. We don't do interest. We don't do all that charging money and all that stuff. So you want a bank that, whereas though the fees are minimum.
Okay. So now let's backtrack a little bit. So if I wanted to start an LLC for myself, what steps do I need to take? I'm Ron the Rapper. That sounds like Chance the Rapper, but I'm Ron the Rapper. And I want to incorporate myself. Okay. What do I need to do to make that happen?
A couple of things. So some people will do it on their own. Some people will get someone that's in that field to do it, like an accountant or myself. So basically it's whatever state you're in, then you go to their website, the Secretary of State website, and you do the incorporation. Well, let me explain this. Each state is different with incorporating. So don't think that just because you're in Illinois, it's going to take 5-10 minutes to incorporate and get you an EIN up on the government website. Because just as well, when you go to Texas website, let's say you live in Texas, it's not going to take 5-10 minutes. It's going to take about 30-40 minutes. And what they require is totally different. So you have to understand the different states and what they require. So it's basically incorporating through the state, whichever state you're in, getting you an EIN number through the IRS.
And what is
employee identification number?
Okay. That's kind of like your business's social security.
It is. And then the new thing that they have going on as of January 1st, okay, for businesses, and it's about 20 something exclusions. I'm not going to name the exclusions. You all can go on the website. From FinCEN, FINCEN, okay, go on that website. Beginning January 1st, all businesses, with the exception of 24 businesses, must do this. If you're already incorporated as a business before January 1st, you have to go and file a business, a BOI, which is like it's a business organization information sheet. It's basically they're tracking to make sure that you have a legitimate business, who is the owner of this business, and you're not having fraud money, basically. If you incorporate a business January 1st on, then you have only 90 days to complete that BOI form from FinCEN. If you incorporate before January 1st, you have until January 1st, 2025.
Okay.
Okay.
I gotta do that.
It's easy to do, but make sure you know what you're doing.
You said that's a boy?
BOI.
I'm just being silly. So you make sure you fill out your bit
from FinCEN.
From FinCEN. Yes. It's business ownership.
Yeah, BOI.
Okay. Cool.
If you go on my page, Prosperous Accounting, you'll see it. But it's from FinCEN, FINCEN.
Okay. All right. And then I know a lot of people that I work with are here in Illinois. And for those of you who are other places, definitely check with your local government. Also, one thing I do want to say before we continue, if you all have any questions, definitely shoot them either on IG or if you all are watching on Facebook or Facebook or YouTube, definitely submit questions and we'll get to them at some point. But yeah, okay. So what does it? Do you know the cost of it? Is it worth it for me? What I guess
the cost of
an LLC,
so the cost of an LLC, yes, the cost is different in different states. So if you do a LLC in Illinois with tax, it's around $260.
Okay.
That's if you do it on your own. If you do it with an accountant, it's going to cost a little bit more.
Right.
The cost of an EIN number is free.
Okay. Wait, so can I get an EIN number without an LLC?
Yes, you can get an EIN number without an LLC.
Why would I want to do that?
You really wouldn't. I mean, if people get it just so that they won't have to use their Social Security number. But if you have a legitimate business that you know you're going to work, you're going to make money, and you're going to make this thing big, you might as well go all the way. And a lot of people do not get the incorporation, because every year, if you're incorporated as an LLC, S Corp, C Corp, whatever it is, you still have to complete annual forms, which is called annual reports. Okay. And if you do not complete the annual report on time, they will involuntarily dissolve your business. And then you have to pay a lot of money to get it back.
And I know even like when you pay that, when you're late on that, they
charge you like 100, 150.
Yeah. Yeah, been there. So, okay. So now let's just say I went through the process. I'm like, okay, I have created Ron the Rapper LLC. And now I'm just trying to think of what benefits I may have now from incorporating myself. Like why did I just do this? Why couldn't I have just been, Ron the Rapper?
Because first off, if you don't incorporate, you're just a sole prop. Okay. Once you incorporate your business, then you have basically stated that you are a business. You are a business. And people will want to really deal with people that have a business instead of sole props. Right?
Well, yes. I think to what you're saying, the more serious you take yourself, the more serious other people will take you. And it looks better as a whole to so even if you're paying somewhere to have a business card that has your name on it. And even when it comes to, it's a little bit deeper, but just having like a website, because I know a lot of times I use my Gmail account, but I really should use my business, my website name on my business, because it just looks better. But
absolutely, I agree. My thing is, you have to put something into your own self if you want somebody to put something into you.
Big facts. You have to invest in yourself.
You have to. And so if you spend that $260 whatever dollars, or get an accountant to help you to really like incorporate and make your business help build your business foundation, and you put that $400 or $500 in of your own owner's money, then you're putting it into yourself. So that really looks good, because now others are going to want to put into you as well.
Facts. So, okay, let me ask you this. I never even thought about this, but I know I had a question from someone a while ago that said he was keeping track of some of his expenses from last year, but he was thinking about registering an LLC this year. Would he be able to claim any of those expenses
as a sole prop?
So
in 2023, he was not incorporated.
Right.
So let's say that in 2023, here's a scenario. You're not incorporated. You made $20,000 revenue. You had expenses of $10,000. Now you net $10,000, right? Yes, you might as well fill out a Schedule C on your tax return and put the 20, put the 10, net 10, and put it all together. You put it on a Schedule C.
Okay.
And that's a part of your personal tax return.
Okay. So, look, I didn't even know y'all could do that. That's that's dope. That's dope. If you need help, man, hit up Michelle, man, because that's big. So
another thing I want to say, a lot of people forget about mileage. You use your car mileage. So a lot of people, I'm old school, I'm gonna use a spreadsheet, but it's apps out there too to help you track your mileage called Miles IQ. I tell all my clients, get Miles IQ. I hear people love Miles IQ. It tracks your mileage. Or you could do a little spreadsheet. You left your business, you went to this place. You have to track your mileage, because at the end of the year, that's a write-off. If you lease a vehicle, guess what? Every payment that you make, anything that you do with that car, the mileage, all of that is a write-off. If you own the vehicle, only your mileage, only your tolls.
Man, okay. So there's things that we can do even as sole proprietors, and as far as like getting tax breaks or claiming expenses on our tax returns. The difference between a sole proprietor and an LLC is just that you are formally incorporated.
Formally incorporated, and LLCs protect you.
How do they protect me?
It's if someone try to sue you. So LLCs, being incorporated, it's not just about LLCs. Being incorporated, it's a protection for you yourself.
Limited liability corporation.
Okay.
Right.
He has liability. So you have to remember, when you incorporate your business, it's a protection for you.
Okay.
It's like a shield.
Right. So like if Brian, who's here, slips and falls and he decides he want to sue me,
you need to get insurance on your business.
Okay.
I tell everybody that has a business, pay the money to get some insurance.
But is that like similar to the protection that you're talking about?
Yes.
Or yes. Okay. Definitely good to know. So we talked about mileage, and I guess what are some of the other, like maybe just everyday things that we do already, that we spend money on already, that once we are incorporated, or if we decide to stay sole props, whatever, could be seen as business expenses?
So I'm going to say business expenses. So for business, you always have to purchase office supplies. Make sure it's for you using it for your business. So office supplies. If you're running your business out your home, then that could be an expense. But just make sure whatever room you're using for your home or the basement, it has a lock and key. So all you would need is the square footage of the entire home or apartment, and then the square footage of the entire room that you're using. Then you would need all your utilities broken out. If you pay rent, you need your annual rent. Okay, you need those, and then it does a little calculation, and then you can write that off. Okay, businesses. You own a studio, you have a studio, you pay rent at a studio. That's a business expense. Okay. Another thing is that businesses, you have prospect clients. You want to go and let's say I take a couple clients out to lunch or something. We meet during lunch or whatever. That's an expense. Okay. So those are the little things that you have to think about. You need a printer. a computer, a laptop, those are legitimate expenses as long as you're using those for the business.
I want to rewind a little bit. So you said if you are in your home and you have a place that you've designated as your home studio, you said it has to have a lock and key.
So
will someone come knock on your door and be like, look, show me your key and show me your lock?
If
for
you
your
get
office?
audited, the IRS can come do whatever they want to do.
Oh, okay.
So a lot of people think that, oh, I could say I have a home office, and just be very careful. A lot of people have been shut down due to negligence. And I tell people, if you have a home office, just make sure you truly have a home office. And you're truly doing business in that home office and what you're putting on your taxes, because everything is traceable.
Yeah. Facts. Okay. Well, what other expenses out there? I like that you brought about food, because I paid, this is the co-mingling you're talking about, but I did buy the donuts for today from my personal account. I probably should have did that from the business account. Shame on me.
Yes, it happens sometime. I just tell people it will happen sometime. Just do not make it don't make it a habit. Okay, don't make it a habit. Put on a receipt what was the purpose of you purchasing it for, and then it goes up under client meal expense or client meeting expense.
Yeah, because you can't. I mean, you can't every day just be like, yeah, this was a business.
No,
McDonald's today was business expense.
People try to do that.
Yeah. Have you ever had to deal with someone being audited?
Absolutely.
What is that process?
All the time.
Yeah.
Yeah, it's really hard.
What is that process like?
So I deal with people being audited by whether it's the state, the IRS, insurance companies, or let's say it's grants, because I deal with clients that have grants and I'm their grant manager.
Oh, this is good.
So it's different audits. So if you're talking about the IRS audits, so those are a little bit different. So IRS audits can actually go from a couple weeks to a couple years. And it's a lot of paperwork. It's a lot of talking to them and sending documentation. It's a lot of work. And when I say a lot of work, I mean by it's forms you have to complete, documentation that they need, receipts that they need from what the client should have already if they don't have copies of their bank statements. I tell people, keep all of your receipts up to 7 years. Don't keep them up to 3 years. Keep them 7 years, because if they find something for 3 years, they can go back still. Even though the statute of limitation, they can go back. Keep everything. All my client stuff, I keep up to 7 years. And then after 7 years, I shred it and burn it. But it's a lot of paperwork. It's a lot of filling out documentation, submitting receipts, invoices, explanations from clients, and things of that nature.
Wow, that's interesting.
Yep. And then let's say they want to come to the client's office. That's a whole separate issue.
Okay.
Okay.
Well, what are some of the reasons that people? Because I feel like, I don't know. I'm not trying to promote like fraudulent anything like that. Let me just say that now. But I don't know. What are some of the reasons that people get audited? Because something looks funny on paper for the bank or for the IRS to want to audit you, right?
Yeah. So
you don't have to give me any real
here's
examples.
The thing, because I'm an accountant and an auditor.
Okay.
So people love the accountant in me, but they really hate the auditor in me. Sometimes I don't like the auditor in me.
Wait, so the IRS will call you and be like,
no. So it's a few things. So the IRS will contact the client. Okay. And let them know, hey, this has been held for auditing or whatever. Or if it's, that's what they'll do. So basically certain things, let's just say, let's talk about the kids. So that's the biggest thing right now that's going. So 1 year you file your kids, and then the previous 2 years, you let somebody else file 2 of your kids, and then you file 1 of your kids. Then this year you go and file 2 of your kids and let somebody else outside file them.
Somebody other than the other parent.
Yeah, that's other than the other parent or other than John Blue or whoever. So that's an audit. That's a flag. Okay.
Yeah.
Another flag could be IRS no businesses, kind of, sort of. Okay. So let's say you put on there, you are, I don't know, I don't know, you are some kind of company, and you say, oh yeah, I have mileage of 100,000. They know certain businesses and know that, hey, this is a no-go. So they're looking at that. That's an audit. Also, different expenses and the way that you put them on there, it can flag. So if the amount is a little bit high, they can always question, hey, can you give us a few receipts? And they'll know what receipts that they're looking for. Forward these over, and then here, we'll send you your refund once you forward this over and we okay it.
Okay.
Another thing is that let's say I've seen this happen last year. You just had a baby, and you claim that baby. The IRS asks for a birth certificate or something of that nature, because let's say the other parent then claimed the baby. So now they want to see who really is taking care of that baby. Who household is this baby really in? So if you have all the pertinent documentation, they can track that baby down and say this baby is with the custodial parent and not with the custodial parent.
Okay.
So it's things of that nature.
Okay. All right.
And then bank accounts. People try to put, if they don't have a bank account, I've seen people use, let's just say they mother bank account or somebody else, that flags an audit, because just a few years ago, the IRS said that your money cannot go in nobody else's bank account if your name is not on it.
Okay. So like if I had a job and I did not have my own bank account, I can't have my checks directly.
A job is different. We're talking about your tax return.
Okay. So you talking about the refund money. Okay. Okay. Okay, cool.
Yep.
Huh. That's interesting. Okay. All right. So circling back to expenses. So don't do anything fraudulent, y'all. Always be truthful to what it is that, you're actually spending. I'm sure there's wiggle room in certain areas, but you don't really want to play with the IRS. There's a radio commercial. This guy promises to get the IRS off your ASS, and you don't want the IRS on your ASS.
You really do not want that. You just be legit about what you have going on. Because also when we do tax returns, and let me just say this: don't just get a tax preparer to do your tax return. They don't know all the ins and outs. Okay, that's why I tell people, get an accountant to do your tax return. And also remember, it's something on the forms that us as accountants have to complete. It literally asks us, do you think that this person is fraud or doing anything of fraud?
Really?
We click that button and we submit your taxes.
Okay.
So just remember that. Come up front, be honest, because everything's traceable.
Okay. So you mentioned mileage. So if I were an artist and I did not have my own vehicle, but I needed to, I don't know, either needed transportation to get to the studio or to a performance, and I'm taking Ubers to do so, would that be looked at as
a travel expense?
A travel expense. Okay.
Yep.
If I have one, I know a music video is a business expense, right?
Yes.
But if I need a nice wardrobe for my music video, I just need to have. I'm gonna date myself, but I just had a
class on wants versus needs.
I need a Davucci, a old school Davucci leather. I need one for this video. No? Okay.
No.
Okay.
Not at all.
No. What about props? Like,
so let's say you're having an event, whereas though you're bringing people in and it's an event-based thing that could slide.
Okay.
So you have to understand what exactly is it and how to maneuver it.
Okay. And then that's where someone like Michelle Dorsey comes in handy, because she will get you right. So you ain't out here buying Davucci trying to write them off. Let me see what else. I mean, and really, honestly, guys. So the goal of this is just so you can understand the benefits of incorporating yourself. Like she said, you protect yourself from people trying to sue you, and then also there are things that you can write off as business expenses, and it's not like dollar for dollar, right? So let's
not, because it's like a calculation. So don't think like, oh, I purchased $5,000 worth of this, so I'm getting it back. No, you're not. It's a percentage, it's a calculation. It's also based on your filing status, single versus head of household versus married filing jointly, married filing separately. It's all based on that. Also, you have to understand, first off, like I said, your filing status, what you have going on, your revenue that you made, and then also, because you are let's say an LLC or a sole prop, it's attached to your personal tax return. So you also can attach your individual things on there too, like donations. If you own a home, your mortgage interest statement, your real estate taxes, of things of that nature.
Okay. Yeah, a couple of more notes here. I feel like we had a few questions, but I think we kind of got through a lot of them. Do you have any advice for someone? We were talking about not being able to maybe start a bank account with certain banks. Do you have any advice for someone looking to build like business credit at all?
Oh yeah, so business credit. So remember, if you currently do not have business credit, they are going to go off your personal credit. Okay, until you build up your business credit. So remember that, and your credit score has to be a little bit higher, like upper fives, higher six, just to try to maneuver that around. But business credit, first off, start getting things in your business name. Okay. Start making payments on time or before the due date. Get on Dunn's and Bradley and work with them. Start working with them. And then remember, get like, I don't promote credit cards like that, but get something credit worthy with the business that's of value. And when I say of value, things that's going to get you back something, points, or get you back perks to help with your business. But those are major ways to build your business credit, to start getting things in the business name.
Okay. Because I think that's important. I still haven't navigated that. I need to.
Yes.
I need to.
Yes.
But I want to say some things, but I don't know if I should say them on air. So maybe we should talk about it after the fact. Yeah. Let's see here. What is the best way? And I think you kind of touched on it earlier, but like the best way to keep track of what I'm doing, like spending wise. Is it just to use one account or?
Yes. So I think that if you're not savvy with the profit and loss statements and bank statements, balance sheets and things of that nature, start with one bank account. Make sure that you're using one bank account for all of your expenses and all of your revenue. Okay. And then how to track all that. You still need to pull that information out of the bank account and put it onto something. So if you're not savvy with spreadsheets, then hey, you need to get an accountant so that they can do your bookkeeping, or either get some type of accounting system to start entering your information into the accounting system so that you can get a P&L, which is a profit and loss statement, or a BS, which is a balance sheet at the end of the year, because you're going to need those two items in order to get your tax return done.
Yeah.
And it keeps you organized.
Okay.
And if you want to go for grants, businesses, artists, you can go for grants. Guess what they're going to ask for? Your profit and loss statement and your balance sheet.
Okay. So, okay. I have this system, and sometimes I have this system where I have like all of my monthly expenditures and all of my monthly income. It's like in a spreadsheet. I got like formulas. There's like multiple worksheets and stuff. I feel like that is overwhelming sometimes to do, but that's essentially what What if I were just like, hey, just take all my stuff? That's what you would do. Just take all of the information, or do you want receipts? Like, how do you want people to do business with you? I guess.
So let me explain this. I've had people come to my office and with a bag of receipts.
A bag of receipts.
That means that you're going to pay me a lot of money. Okay. The receipts are for you to keep. Okay. It's for you to keep and keep organized to know that you already have those receipts on hand. And that's why I'm stressing having an accounting system or your accountant do your bookkeeping. You cannot play around when it comes to businesses. People think like, oh, I could just do a spreadsheet, or at the end of the year, I can get my bank statement and total up the numbers. You're going to miss something. Yeah. If you're that passionate about this business, then you're passionate about keeping your books in order as well. That's how you build your foundation with the business. It's all about building a foundation so you can not just be sitting at $1,000, you can become a millionaire. Thanks. And that's what we build in my company. We build up millionaires to keep them millionaires, honestly. So the thing is, I would say that if you're using a spreadsheet, make sure each tab is for that year. So you should have a 2024 tab with the months all across, and then your revenue first, and then your expense categories down below, and it should all calculate up. And then for each month, you should have your receipts and categories. Here's your supply category worth of receipts, your equipment. Here's your revenue invoices. I don't need to see those, but you need them in those categories. All those receipts and invoices that you have should calculate out back to your spreadsheet or the P&L that your accountant is doing or I'm doing for you. So that, hey, God forbid you get audited and they ask for a receipt, your receipts also should be in date range. Be in date range. And then once you do your tax return, at the end of the year, you give me your spreadsheet and all your other, if you get a 1099 and all your other documents, I produce your tax return, you get an executed tax return, you get back all the documents that you give me, and you go home or go wherever, your office, and you take all those receipts, you put them all together and you box it up and keep it for 7 years. 7 years too. Man, okay. You know, God, just be with me, you know. Look out. 7 years. I know, Brian, you had a question. We may have answered it, but just to make sure we do, you wanted to know the benefits of putting a production company under an LLC, and then what are the cons of doing so. So I guess what kind of production company?
Entertainment company.
Okay.
It's my entertainment company, and I think I have it under a sole proprietorship. It's kind of hectic in my life right now, so things are kind of like all over the place.
Okay.
But I believe it's a sole proprietorship. I have an EIN for that.
Okay.
And so when I found out about this, when I saw the term, the topics that you were going to be speaking on, I was like, well, let me try to get some information and knowledge about it and see if, that would be beneficial for me to put it under, because lately I've been listening to certain people talk about certain things, and not even just with businesses. They've been talking about just kind of like putting certain things under certain umbrellas.
Yes.
Basically, I guess, fortifying it, so to speak. And I just want to kind of.
So the only con I see is it being a sole prop. That's the only con. You have it as a sole prop right now.
Right now.
That's the con. Okay. Yes. Put it under the LLC. I would say, because that's what you're going to continue doing, correct? You're going to continue doing the business, right? It's not going anywhere. Might as well incorporate it to make it legit. Then now what you can do, you got more perks with expenses. Okay, you get those benefits as well. Benefits of adding all your expenses, because now you have a legitimate incorporated business, right? They're going to look at you like an incorporated business. That EIN number that you have for as a sole prop, you need to now contact the IRS to transition it to, once you incorporate, as a LLC, or just get a new EIN up under the LLC. Okay, so now do you work out your home?
Not really.
Okay.
I'll do some of my editing and stuff at home.
You have an office that you work out of?
Well, it's kind of defunct right now.
Okay.
So I'm really kind of like in the rebuilding stage, actually.
So that's fine. So wherever let's say you start working out of your home, you can write what I'm getting at. You can write off some of those expenses. If you go out and rent a place, you can write off that expense. So now, or you can start building up whatever office that you have and putting it up under your LLC and say, hey, the name of my business, blah, blah, this LLC. You have more perks. Why? Because it is now incorporated. And now you have to do something every year. You must keep your business incorporated and in good standing by doing your annual report each year. That's going to make you continue to build up the business.
Okay. And so in your role and what you do, am I able to hire your services or to get you to kind of help me get that in order?
Absolutely. Yep. Okay. You sure can. Yep.
All right.
And then on my website, it's on my card as well. It shows maybe about 80% of the things that we do. We have a list of the things that we do on the business. We're a one-stop shop for all of our clients. Literally, they don't have to look or go anywhere else for every single thing that they need.
Yeah, and then plus also caught my attention when you was talking about. I had just got my taxes done. Mm-hmm. With this guy, and I mean, he was legit and everything, but I think you had said something about taxes earlier that just kind of piqued my curiosity. Oh, you said basically he's a preparer,
tax preparer,
yeah, but you're an accountant, so you basically.
Let me tell you the difference
between tax preparer and accountant.
So I said this on the radio last week. Okay. So the difference between a tax preparer and an accountant. A tax preparer, people that do taxes are only open a few months out the year. Okay, so you better get them when they're open during tax season. Okay, they also do not look. Some of them look for some of the things. They do not dig deep. Okay, accountant, I'm open every single day except for Sunday. Okay. Another thing is that we dig deep. So instead of spending 30, 40 minutes with you on your tax return, all my clients get either an hour or an hour and a half with me. Why? Because the system that I pay for through the government, it gives me a red light, yellow light, green light. Green light means the system and IRS has found every single benefit that can help you on your tax return. The red light means stop. Here's a list of the things we missed. Ask them these questions because they can get possibly a little bit higher or something's going on. Yellow means it's a possibility. So you want somebody that's going to dig deeper. Let's just say when I say dig deeper, a regular tax preparer, when you go into their office, let's say you're married, you and your wife go in their office. They're going to look at your salary. How do you want to file? Married filing jointly. They're going to do it. Me, I'm going to look at their information and be like, how you all been filing? They say single, married filing separately. I'm going to look at it and let's say I see, okay, this is what the both of y'all can get filing separately, but this is what you all can get filing jointly. You all have been doing a dishonor to you all self. Tell me the reason why you're filing separately. Some of them just be filing separately just because. Some of them have legitimate reasons. Accountant dig deep. We dig deep. You want somebody that's going to dig deep and help you. That's what you're looking for.
Okay. Appreciate it.
And I do have one more question too, because I think maybe some of the discouragement, or maybe not even discouragement. I think it's just some people don't have the information. But if let's just say I decided that I was going to register myself as an LLC. I work a 9-to-5 job and I'm spending my money from my 9-to-5 job to go to the studio and to, shoot music videos and what have you. Mm-hmm. I'm doing all this stuff out of my own pocket, but I'm not necessarily seeing any return yet from the music business because it takes a while sometimes. I mean, and to dive deeper into just like running a business, like for instance, I spend money per month on Google and then sometimes on Facebook to advertise. Mm-hmm. And I think, a lot of artists don't necessarily get there, but I feel like maybe it's a fear of not having a return on the investment. that prevents them from doing that. So let's just say I'm spending all this money and I'm not really making any back. Will I still be eligible to receive tax benefits?
So you're putting your own money into the business, which is called owner's equity. Okay. So, but you still have expenses from that business that you're paying off, but you don't have revenue fully coming in with the business yet. And starting off with a business, it happens. You got to build that business, but you still file that because you still have the expenses. Right. You don't have revenue. You're not going to put on your tax return your own money that you're putting in the money into the business. So let's say you put $3,000 of your own money in there. That's not revenue that you received from the business, but you also had $8,000 of expenses. You're going to file that $8,000 of expenses on your tax return. Okay. But you're also in the midst of the year that goes by. You're going to see what you did wrong, how to change, and how to build, and how to bring in income. You see what I'm saying? So you have to understand the first couple of years of a business, yeah, it's up and down, but you're still going to put that on your tax return because you still have those expenses. Okay. And in the midst of it, you're going to figure out what's needed.
Right. So and I like the way you put that, because you're not saying just let this be.
No, you can't do that.
the way it goes, but you wholeheartedly want people to figure their, lack of a better word, figure their shit out.
You really have to.
Yeah,
you do. Because you can't get discouraged just because, oh, I just started this business and I'm in the second year and I'm not making the amount of money that I want. Well, you're not making the amount of money that you want. Why? Because you haven't did a SMART goal for yourself. So you have to do a SMART goal for yourself.
A what?
A SMART goal.
What? Okay. Now this is business class. Let's talk. What's the SMART goal?
So okay, we make goals. So your goal could be, let's say my goal is I want to be so let's say your goal could be, hey, I want to make $5,000 by, I don't know, $5,000 a month. Okay. And that's just a goal. Mm-hmm. But how to make it a SMART goal? SMART means what? Make it specific. Okay. Measurable, right?
Ooh.
Attainable.
Acronyms. Okay.
Relevant. Mm-hmm. And time bound. So now you got to put those stipulations on there. That's how you make it a SMART goal. Okay. Break that down and start making that goal a SMART goal. And then every day you have to go to SMART and see what did you do to make it a SMART goal. That's going to push you. Okay, that right there is going to push you. People look at things and be like, oh my God, this didn't happen. This is a business. Businesses are hard. Mm-hmm. God is not going to give us something that's easily attainable. So faith without works is dead. So you have to have faith, and you can't look with your natural eyes. You have to look with your spiritual eyes to see what's great out there for you for your horizon. So once you look and see what's great out there for you for your horizon, and then you got all these people around you that's willing to help you, take advantage of that. Mm-hmm. Take advantage of that and build your business. Never give up, because that's what the devil wants you to do, to give up. Never give up, because guess what? On the third or the fourth year, let's say the third year you made 500, the fourth year you made 1,000, that fifth year you could make 20.
I love that. I love that.
The R stands for.
Yeah, let's break down
relevant.
That SMART.
Relevant.
Yeah, I'm definitely going to go back and check this out. My dad is trying to FaceTime me. I don't think he realizes what's going on right now. But let's see. Is there any more questions that I had here on my list? Yeah, so there's no, just to be clear, there's no like money, no revenue threshold that we need before we can file. We just covered that. So that answer is done.
I have people that figured out, hey, this is the business I want. And they be like, Michelle, calling me up. Hey, how much I owe you to do a LLC or S corp or whatever? They ain't made no money. They just starting it out. They stepping out on faith. That's the best way to do it. Step out on faith and get it done.
Yeah. I mean, what you just said, though, like is even bigger than just the LLC, like this conversation, like just really just believing in what you're doing and taking it that serious. Because, man, that's so important. Like you have to 100% believe that you can do what it is you say that you want to do, or else you're just not going to put forth those steps to make it happen. And, you know, it all starts with you. But man, that was very, very informative. I do not see any more questions here in either of the chats. So I'm going to go ahead and say that's a wrap. But before we leave, let people know how they can find you and the different services. So it's not just obviously you're not just a tax preparer, you also are an accountant. You will work with people around the year.
Yes, 365 days. Okay. So Prosperous Accounting Services. My phone number is 773-407-2071. Again, Prosperous Accounting Services, 773-407-2071. My website is www.prosperousaccount.com. www.prosperousaccount.com. A few services. We do business and individual tax returns, grant management, grant billing. We deal with the government, state, private agencies, all that. Budgets, incorporations, audits, payroll, financial literacy. I am missing some things. If you go on the bookkeeping, if you go on the website, certifications, you will see everything that we do. We do also on the website give 15-minute free consultations, but it's literally only 15-minute free consultations. We deal with clients in every single state and also one country. We are now branched out to 20 states right now, and China as well. So we do a lot.
So, okay. And you started Prosperous Accounting Services.
I did. I'm the owner of it.
You are the owner. Mm-hmm. And how many people do you have?
So right now I have 3 people right now. And I just interviewed one other person yesterday. So we'll see. Okay.
And how long have you been doing that?
Since 2005.
That's dope. That is dope.
2005, incorporated in 2012.
That is dope.
Yeah.
What took you 7 years to incorporate?
Well, the IRS, that's a whole separate story. So when I was filing my taxes with the business on there, and then I got a letter from the IRS telling me, basically they were saying, don't you think you need to incorporate? So again, me telling on myself, I called them and was like, yeah, this, that, and the other. And I said what I said. And they was like, ma'am, can you please incorporate the business now or we're going to fine you? So I incorporated the business. I just was helping. By that time, I had branched out and started doing so many other things. It had literally slipped my mind to, Michelle, you need to incorporate. You're incorporating all these other people. And once I got the letter, I was like, oh yeah, it slipped my mind. So I called them and told them. And I just went ahead and incorporated.
That's dope. That's dope. You know, it's funny. Now that I think about it, I have the IRS, the people on the phone. I don't think that they seem to be pretty friendly and helpful. Because some
of them are.
Some of them are. I must have been lucky when I had to talk to them about some stuff. They were very helpful and they helped me through my issues.
You can get some really good people. I've been able to, when I was going through my little thing of learning things, get some really good people. Some of them, I say that when you get the individuals that's snappy, they had a hard day. In this business, it's hard. You dealing with people, money, and people don't understand it's stressful. It's very stressful. It's weighing on your brain. So it's a lot. So
all right. Well, that concludes it. It's your boy Ron, aka Ignit, aka Ron the Rapper. This is BBE TV. I hope y'all found that stuff informative. Definitely hit up Michelle if you are looking to start your LLC, or if you even just need some help getting all your expenditures together, because I feel like I need to just go ahead and stop trying to do my own taxes, because you just made me feel ashamed of myself. But that's a whole nother story. Till next time, man. Take care.